Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of October the 17th, 2016. Now once again we begin our week with the US dollar index and how it's affecting the major equities, commodities, and of course currencies. So when we look at the current situation of the dollar index, the dollar's had a very good week. We've now broken above the Brexit high point that I've talked about. We're holding firmly well above the Brexit low point, but the breakout in this particular area is significant. But the problem we have here, guys, is that every time we've made a new high in the dollar index, it's ultimately corrected significantly. Now the Fed minutes have come out. They're very mixed in my respectful opinion. We have the US we've come through the non-farm payroll number. I don't believe that number is accurate. I think that the Democrats have monkeyed with that number. Let's just say that to some degree. The other economic data doesn't really support that payroll number that I'm seeing, but who knows? Anything's possible. Of course, we have a U.S. election coming up, which is shaping up to be quite the mess, actually, for the U.S. We've got tensions between Russia and the U.S., so a lot going on that actually, for the most part, does favor the US dollar. Now, my concerns here are key VantagePoint 18-day predicted EMA. We're just going to clear some of this off here so everybody can see this. Our 18-day predicted moving average, our key VantagePoint level here, we are firmly above that level. However, the further we move away from 96.61, the more likely it is we're going to retrace to this. If we look at our medium-term predicted difference against our long-term predicted difference and our neural index, it's warning that we're starting to run out of steam a bit here, guys. So it's not that we're going to see necessarily a trend reversal in the dollar, but a corrective move is very likely here. So we have to be a little cautious of that next week. Further case in point here is our predicted RSI is moving up into towards the 90 level, which is in grossly overbought territory. We can see once again, once we made our last new high up here in this 97.50 area where our predicted RSI was, we had a pretty significant sell-off in the dollar index, but again, it was simply a corrective move. Then we came back up. You can see the little zigzag pattern here. That's what makes that indicator so popular. Again, these are not, in my respectful opinion, they're not waves. They're not, it has nothing to do with Fibonacci. We're simply running out of buyers here, guys. So when something can't go any higher anymore, it's simply based around we're running out of buyers. The trade is getting a little bit too one-sided. That could be the case here with the dollar, but at this particular time, I'm not convinced. But once again, in my respectful opinion, we want to watch the 96.61 area to hold above this area. And again, right here, you can see that 96.61, the VantagePoint 18-day predicted EMA exponential moving average, coincides with the Brexit breakout point. And again, I'm going to highlight this so everybody can see this. Now, we've been trapped in this range for basically 4 or 5 months here, guys, and a break of that area certainly does make for a bullish case for the dollar going forward. Now, of course, in this type of a cycle that we're in with a rate hike cycle, that does not favor equities in any way, shape, or form. So when we look at this right now for next week on the S&P 500, this is the critical level we want to watch, 2144. Can we get back up above that? Close above this area a couple of days, that would take the pressure off the downside. But looking at Friday's close of 2126.90, it certainly doesn't look that way. We're back here again on this level that I've talked about for several months, the breakout point from the Brexit. We can see that based around that Brexit high, the S&P 500 really took off, but then it just stalled right under 2200, 2190. Can we get back up above that towards the end of the year? I think it's going to be very difficult unless the Fed once again interferes with these equity markets and tries to weaken the US dollar. So if that happens, then the equities can move up, but right now it certainly would appear that we are moving lower in these equity markets. But I really want to see a sustained break below the 2100 level. That will confirm a trend change. We don't have that yet, guys. So we just need to be very, very cautious where we if we're buyers up here or sellers, we need to be very careful around this 2115, 2110 area. Okay, so watch that area very closely. Now, if the S&P 500 does move lower, it will take the DAX 30 down with it. It will take the Nikkei down with it. You can see the Nikkei is getting into a very tight channel around this 17,000 mark, and again, right around the VantagePoint 18-day predicted moving average, and of course that Brexit breakout point. So when the Brexit here, you can see once again, much like the S&P 500, the Nikkei didn't really respond as well as the S&P, but it did stay very, very close to this line here. But our order flow guys, they're selling into this area. Now, if they can take the Nikkei lower with the S&P 500, that is going to have an absolute effect on a number of different things in the currency markets, but more specifically, the Japanese yen. So this is something we want to watch. Watch the Nikkei very, very closely going forward. Now, we've had a big push up in oil, but once again here, guys, this is based around a lot of this is based around what's going on with OPEC, with Russia, with the US. All these different things is pushing the price of oil up. But we can see that, once again, we're not getting above this 52. We've had a good break above this Brexit low point. So it does carry a mild bullish tone to it, but once again, when you have a fundamental fundamental noise interfering with this, you can see our medium term predicted difference warning us right here that this rally up in oil is suspicious, to say the least. So our key vantage point level going into next week, 49.17. We're looking to hold above that area. Then maybe we can see oil break higher, but we also have to break this swing high at the $52 per barrel mark. I'm not at all convinced here, guys, that that's going to happen. I think if the equities move lower, it's ultimately going to bring oil down with it. There's a better than 50% probability that that will be the case. Now, with gold, I think that everybody here on Trader Planet knows that I've been somewhat bearish on this over the last several months, but with good reason. When we look at our price action here, basically gold made all of its gains off the back of that Brexit vote. We've come down, we've retraced, we did not make any new high, we came back down again. We've got a series of lower highs, all of this leading to a big sell-off this past week. And once again, all you can say is kudos to VantagePoint. This is a great call here off of this 13.20 mark, gold dropping about $80 an ounce. What a fantastic trade. We've broken through that channel. But again, we've had a lengthy warning here, guys, that this was going to happen. The Fed, the interest rate cycle in the US, we're seeing a weaker euro currency. All of these led to a breakout. So when the Euro-US currency broke out to the downside this past week, people have a lot of different analogies why that happened. But the reality is when gold sold off, it took the euro down with it. That's what happened, guys. If you cross-reference the two charts based on the intermarket correlation, it's indisputable that when one went down, it took the other one with it. So where we're at currently, we do have a problem here. Once again, one of my favorite indicators here, our medium-term predicted difference, warning us that this downward momentum is losing steam. Now, we're right on that Brexit low point again. So if gold is really going to get moving to the downside, I'm not convinced that that's going to happen before December. It could, but it's going to require a lower euro also. So right now, we have a lot of activity right down here on this Brexit low point, right around the 1250 mark. We can see we're closing at 1253. So if you're a euro trader here, guys, euro Great Britain, euro US, any of these things, then you need to be watching gold. You need to be watching gold very closely. If gold starts to recover and we have a corrective move, if nothing else, back up to this vantage point 1281 level, then the euro is going to rise. Okay, euro US is going to move higher. So everybody's getting very bullish on the US dollar. It's just important that I bring to everybody's attention the global intermarket correlation between the euro and the gold. So keep an eye on that. So as we move into that, once again, based as a segue to that, you can see that I'm coming right to the euro chart, and 109 is 109.10, 109.25. This is the Brexit low point. So there's two ways to interpret this: that the euro is lagging behind the gold trade, or that gold is stalled out and the euro and gold are both going to start to move higher. Now, if they do move higher, I believe it will only be a corrective move, and it will be back towards the key vantage point level here, which is 111.23. Our indicators here are still pointing down, our predicted short, medium, and long-term differences. The position of the predicted MACD below the zero line is in very good shape, but our predicted RSI, guys, that's a problem here. 11.5 on the predicted RSI. I can't remember any time this year that the RSI has been this low on this currency pair. So certainly, you know, people that trade off of overbought and oversold signals like this, they're going to try and get long off of here. And there's the possibility that we do have a good trade here. I think if nothing else, we're going to see a corrective move, probably back in between one of these two areas here, which would be the 8-day or the 18-day predicted moving average, coming in at 110.68 and 111.23. So watch those areas very closely going into next week, and if we start to see price rising off 109.25, then we would also be looking to see gold rising off that 1250 mark. So you heard it here, guys, what you should be looking for. And again, I always try and, you know, bring the intermarket correlations to light so everybody can has a better chance of having a successful trade. Now, the same would apply to US Swiss franc. Not a lot is required here, but once again, it could be the indication here that the euro currency on the breakout below 109.25 is going to happen, because we can see on US Swiss franc that we've broken to the upside. Our key vantage point level, 98.06. This is a very powerful area of support right now, but we need to get moving here, guys. To be perfectly blunt here, our predicted short, medium, and long-term differences look good, as does our predicted MACD, but once again, our leading indicator, our predicted RSI, 76.8. We have room to extend, but I'm a little cautious here that we could see a corrective move, not necessarily a trend change, guys, but a move back to the 98.06 level, which I anticipate should hold. But the thing with currencies is that nothing goes straight up and nothing goes straight down. They have significant corrective moves, usually after they make a new high. Now, we haven't made that new high here yet. We can see that new high back here is 98.50. So I would look for a move above 98.50 before we have that corrective move. Then again, we would be sidelined and wait for it to move lower, so we can pick up longs yet again, as in anticipation for a November, well, more likely a December rate hike. Now, as we come into our additional currency pairs here, the British pound, US dollar, I'll tell you guys what I tell my own direct clients every week: stay clear of this pair. We have what could be a significant swing low right here, but the problem is that came after a flash crash. Whenever I hear or see a flash crash, I completely disregard that currency for weeks, sometimes months. Several years ago, we saw this with the US-Japan pair, when the nuclear breakdowns with the earthquakes, etc. You move away from a currency like this until it stabilizes. Right now, our key vantage point level, 126.06, but I will once again give a lot of credit here to VantagePoint when they made the call on the short on this at the 132, 133 area, and then the subsequent break that I discussed that I discussed weeks ago about this channel break, and that led to a substantial downside move. Now, right now, very mixed signals, heavily oversold here, guys, but once again, until this pair stabilizes, it's best to just stand down on it. Now, with the dollar yen here, very close to hitting our stops around that 104.50, 104.60 area. We've got a significant swing high right up in here where we've had a failure. What often happens when we have a new swing high, after we get that swing high, you can see we have a corrective move. Now, the primary range in the Brexit on dollar yen is holding, guys. It's holding up in the 107 area. A lot of people are trying to get long, looking for a move back to retest this 107 area. The indicators from VantagePoint are warning against that. Our medium term crossing over our long term predicted difference. We've got an overbought condition here on the predicted RSI. All of this put up against a swing high tells me we're likely going to correct lower, and we're probably not going to move higher. But once again, if the equities can kind of turn around a little bit, and the Fed doesn't interfere with the equity or the currency markets, then the dollar yen could rise. But for now, clearly, we have a very conflicted market around this 104.20, 104.50 area. The key VantagePoint 18-day predicted EMA coming in at 102.83. That's the level we want to watch here, guys. I feel we are going to correct lower to that on an equity sell-off. However, if the dollar does lose ground, then the equities will rise, and we should see, we could see dollar yen move higher. But right now, guys, to really be comfortable getting long on this is buying above 105. Breaking free and clear of this will be, if we can get moving, this will be a very easy trade, probably back up into that 107 area, but we have to just break free and clear of this 104 zone altogether here, to be very clear. And again, the indicators very, very mixed here from VantagePoint. So when I see this, the dollar yen is not the perfect trade next week, but shorts still carry the edge based around the intermarket correlation that if the equity markets are going higher, dollar yen is going higher. If the equity markets are going lower, dollar yen is going lower. Keep it as simple as that, guys. If you're trading this pair, watch those global equity markets very closely. Now, with the U.S.-Canadian pair, the Canadian dollar in general is trying to break away from its correlation to oil, but it is struggling. Now, our key VantagePoint level, 131.76. We're closing 131.39 based on the rising oil prices. But a lot of the signals in VantagePoint on the oil contracts is starting to show a top just under that 152 area. So if we get oil selling off, that's going to put the upward pressure back onto the US Canada. But once again, guys, we're at this breakout point, and I can't stress enough once again that every time we've made a new high on this particular pair, that's been followed by about a 200 to 300 pip corrective move. So let it correct itself. 131, very good possibility that we're going to see some buyers coming in here. We can see the predicted RSI in this particular case is not. It's not overbought, it's not oversold. It's 44.6. It's below 50, but it's not below 40. So it's got a slight bearish tone to it, but it's not in a breakout scenario here. Very important that I stress that. So only a sustained break of the 131 area, a close below that area for a couple of days in a row would then take the pressure off the top side. But we're going to need oil going higher. We're going to need equities going higher for the USCAD to move lower. So keep a close eye on that right now. Our indicators here are warning that we are going into, again, yet another corrective move on this particular pair. But ultimately towards year end, guys, I see this back towards the 138 level. Now, as we come into our final two commodity currencies, Aussie US and New Zealand US, these are both very tricky pairs to trade. They tend to follow China more than anything. Now, once again, we're back up to this Brexit high, this 76.50 area that I feel like I've been talking about this for the last 5-6 months here. But you can see that there is a lot of activity that's around this Brexit high point, and we've had multiple failures here. So once again, we're back below it. We're back up closing at 76.10. The VantagePoint triple EMA cross trying to put out a buy signal. I don't dispute that our medium-term predicted difference against our long-term is warning us that we are potentially going higher on the Aussie US dollar. So what we're going to need here is we're going to need higher metal prices, guys. We're going to need equities going up. Commodities across the board have to start moving higher in order for the Aussie US to move higher and in order for New Zealand US to move higher. So right now, very mixed. I'm looking for a clean signal from the predicted MACD. We don't have it yet. And again, we have such a congested area of resistance between 76.50 and this swing high back up around 77.50 has clearly been the sell zone for the last 6 months. So we don't want to overthink this one here, guys. You know, sometimes we can get mixed signals. We've got a lot of fundamentals we're being hit with, but for now, guys, keep an eye on the areas that I've talked about. You've got multiple swing highs that we want to look at, and we want to respect these levels. And they're basically, once again, we start at 76.50, and that number goes all the way up to 77.50. So only a sustained break of 77.50 is going to take the pressure off the downside here, guys. Okay, and the same applies for New Zealand US. Now, New Zealand US, it's still aggressively moving lower. I think we could have some further downside. That Brexit low point here is back down around 69.50, but you can see we're starting to base out right here, so we could see a corrective move, likely will, back up to this 71.80 mark. Now we're closing the week out at 70.80. So once again, guys, only a sustained break of 71.80 will take the pressure off the downside. So if we can get above 71.80 this week, hold above it, then we've got a shot at moving higher. But right now, there is still a substantial amount of technicals and fundamentals that show further downside on New Zealand US before it starts to rise again. But again, for New Zealand to move up, we're going to need equities going up, and we really need those metals, silver, gold, iron ore, all of these things moving higher in order to strengthen the New Zealand currency.